Chat, what's up? How did my stream cut off? Can you guys hear me? 1, 2, 3, 4, 5. Can you hear me? Oh my gosh. Oh my gosh. What happened here? Was I ever live this whole time? Or is this the first time I've gone live? Because I just looked and my stream wasn't actually broadcasting. You haven't seen me yet? Pump it, pump it, pump it, pump it. Bro, I've been sitting here talking to myself for like 3 minutes. Why didn't you guys tell me? No, I'm just kidding. Y'all couldn't tell me. All right. Dot plot. Boy, I dropped the ball on this one. Okay, I was wondering, I was like, where's everybody at? I'm like, chat, can you say something? I don't normally stream at this hour, not my normal time slot, so we're just gonna kind of pop in here and analyze this. Yeah, I was getting a haircut. I was kind of like tuning into other random streams. I've realized that I've never watched a lot of other streamers, and now I realize when I watch other streamers, there are a lot of dumb fucking people out there. Literally dumb people talking about this stuff. I tell these kids out there, like, would you like to compare math degrees? Maybe we can go all day long at this, but I feel like every influencer or weirdo out there has a desire to like try to teach you something, sell you something, whatever. But these people have no clue. We did. We said the market was bullish since Friday. Bull structure, we talk about all day on the stream. Bull market since Friday. Since Friday, it's Friday. Structure's bullish. So easy to see that. The aggregate of the S&P stock, 63% of the market cap's flexing the bull side. Flux is a word for movement. Some ancient figures. Yeah, let me tell you what this is. This is how you read a dot plot. So what caused the initial sell-off in December was after the election. Before the election, you didn't see it looking like this. So what is a dot plot, you may ask? This is how the participants assessment long-term outlook is graphed for you to see. Each one of these dots is a person in the FOMC. Hello, I am the chairperson of whatever. There you are. That's you. And this one's like over here, and this one's over here. And they sit there and they talk about what they think the policy should be. Now, I didn't read the news yet. I'm just guessing that my prediction was right like it usually is. There was no rate cut. Was there no rate cut? No rate anything? No change? I'm sure there was no change. I just now getting back after my fresh new haircut. No change, I bet. Why would there be? So, Fed will slow the pace of the balance sheet runoff. Well, that's the bullish news today. That's even bullish on top of bullish. Slowing the pace of balance sheet runoff. What are we slowing this QT and flipping over to QE? This is nice. Wall Street likes this news. Haircut looks fresh. Thank you, Vanessa. I love you. Right here. That's extremely bullish. Well, it's not QE bullish, but the Fed is letting things roll off the balance sheet, like basically things go to maturity, right? Treasury bonds, all kind of stuff. So the way the Fed prints money is that the Fed prints money, and the way that it circulates is they buy treasury bonds from the U.S. government, and then they buy the bonds. Government gets the money, and then the money circulates. And this is how that balancing act works. And balance sheet runoff has to do with letting things on your balance sheets expire. You know, if you are letting things run off or mature, what it means is that you're letting, you're injecting less money into the system. That's what that means, right? So quantitative easing, quantitative tightening has everything to do with buying assets, not buying assets. Fed balance sheet, all part of this. So we're in a period of QT right now where they're no longer buying assets. They're letting the assets they have mature and roll off. But the rate at which they're maturing is slowing down, which means QT, you're a cutie, not me, you. Starting to slow down. So interestingly enough, we are in a space where it's a hint that QE may be on the horizon, even though it's not. I tell you it's not. Wall Street sees this as that. If anybody's questioning why the market, I turned on when I was getting a haircut, and I watched one streamer go like, I don't understand why the market's going up. And I'm like, I don't know if it takes like one sentence to understand. I mean, this is what happens when people start trading like in 2021. They have no history with QE, QT. I've been through it all. When you've been here as long as I have, you know how much Wall Street loves hearing this shit. They love it. This is as bullish as it gets. I would be taking a second mortgage in my house and longing the market even on a hint that there's QE. on a smidge, on even a touch. Like I said, there are some fucking idiots that stream on YouTube. I'm talking like idiots. Like with followings. So the people that watch them must be even bigger. I don't understand. How can you not see the first headline and say, oh my God? Just even if Powell was to say quality extra, 2 words that began with Q and E, the algorithms would go crazy. It's close enough. Today we're doing quality exercise. Wait, well, what was that? QE? Long the market. It's that fucking bullish. You have to have been starting your trading career in like 2020 to never understand how powerful QE was. QE yanked us out of a recession and rallied us for 12 years. Literally 12 years. Some people just don't have trading history to understand what this works. Now let's talk about the participants' assessments. Pretty much no change since the last time. You guys know how this graph works, right? This is every single Fed member that talks about what they think is going to happen. And guys, smash that like button. We're doing a special afternoon stream today. Currently, the assessment is that we're going to sit here close to 375 in 2025, okay? What is the current rate right now? We had no change. Do we have no change today? I'm assuming no change. Let's just say I didn't read the news, but I'm assuming no change. You start in October, you have no history. Good. This is where you're going to start the right thing. So it's 4.5, no change. Okay. So no change. Let's look at Fed Watch for the next rate cut meeting. See if that's changed. 1%, 4.25. This is currently for the March meeting because you don't have the next one on here yet. All right. So from here, let's pull up the dot plot again. So what you're going to see on this particular thing is our 4.5 now target rate. It looks like 375 is the way it's going to be in 2025. That roughly equates to roughly 3, or actually 4. Sorry, this is here. So 2 rate cuts at 4 from 4.5. So we're going to get 2 times 25 over the course of this year. Now in December, we had a problem. See, before Trump came into the picture, this market was extremely sensitive to the inflation caused by COVID. These are called cost push inflation. Had to do with the shortage of raw materials, goods and services were hard to come by. Prices baked in really heavily. This stuff, and the people needed extra higher salaries to get it, and everything inflated, right? That inflation's actually been coming down. The soft landing Powell talked about that. Inflation coming down is a natural occurrence from just commerce picking back up. People getting out of their house, taking their mask off, going back to work. Okay. Now, what you saw was a distribution of where people think we're going to be. Now, most of the Fed is here. 4 people are crotchety old. We don't need to cut rates at all, bro. Stay at 4.5 forever this year. Okay, fine, whatever. 4 people are like, 1 more is good this year. 1 more. 9 people are like, 2 more. And 2 more people are like, maybe 3. So you can see that the majority of the FOMC thinks we get to cut rates this year. You also see Ukraine has a ceasefire. Oh, that's kind of cool. Won't affect our market though, but that's good to hear. I hate war. Only a few people think no change this year. The majority of people think change this year is good. 0 people think we're raising rates this year. That's perfect. As a matter of fact, 0 people think we're raising rates at all over the next ever. It's not even their purview to raise rates. So let's start at the top, as good engineers as we are. No chance of a rate hike at any time between now and 2028 plus, because nobody even thinks it needs to go there. 0 people are voting on that under current economic conditions. So let's nuke that off the list. Rate hike. Rate hike. Nope. Bye-bye. Okay. Next thing. Rate cuts. The majority of people, you think of it like a bell curve where that distribution is where you assess about what futures are going to price in rates to be. As you see, the peak here and the peak here is roughly 2 spaces away. So 2 times 25 this year, i.e. 50 basis points this year, and on average 50 basis points next year. That's a full total point over the next 2 years. This one, however, is where things got problematic. Once Trump got elected, or before Trump got elected, these things were beautiful sideways parabolas, okay? But the minute Trump got elected, half of the people changed their stance. You will see on this dot plot to the right, the problem that we had in December, which flipped the market bearish. You have two camps of people. This looks like a snowman. When this thing looks like a snowman like this, you need to understand why. A large bulk of the participants think the longer term outlook is to continue to cut rates. About 25 here and about 25 here. Okay. The other large chunk of people, especially if they migrated from here, if you count these up, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So the people that are here, I'm going to circle them in a different color, are pretty much staying put. These guys, and these guys. If you do the math on this, as you see, there are two people that think we need to raise rates. There are 6 here, and 6 here, and 6 here, and 9 there. Right? Of these 9, one thinks we need to cut further while 2 are staying the same. But over here, the long-term outlook of these 9, 1, 2, 3, 4, 6, 7. There are 2 people. Hold on, wait, hold on. Let me double check the math. Hold on. Before I get all crazy about this, let me double check. So let's account for the 9 people. The best case scenario, all 9 of these people. So 6 here. Let's circle. These 6, those 6, those 6. Okay. So everyone's still kind of okay. So these 9 additional. Here it is. So of the 9, 6, 7, 8, 9. I'm just going to circle the next 9. They think there. 1, 2, 3, 4, 5, 6, 7, 8, 9. They think there. Okay. So of these 9, as you see, there's kind of a distribution as the majority of people in this larger chunk are still kind of on the fence on what they want to do. But when you go from here to here, you can see that that 9 is kind of distributed in a very strange way. Some of the people think that we need to be about here. And some people need to think about here. Now, everybody thinks we're cutting rates, but the thing is that some of them think stopping here is where we're going to end up. And when the election happened, what you end up seeing was 2 different camps of where that mean is. The majority of people think they're here, but the other majority, there's 2, think that we're here, there. We're going to be here. And same thing here. There's a kind of a bunch there and a bunch there. So what the fact is, instead of it being a nice kind of agreeable assessment, we have 2 camps. And what caused the 2 camps after the election? The last time we got this dot plot after the election, this is what it showed. It has everything to do with either one of 2 things. Either half of the people were lying before the election to maybe pad the numbers to look more bullish than normal, because the market's gonna be very bullish if this trend goes down this way to help Biden get elected. That's one of the theories that we threw around on Wall Street. But one of the major theories that makes like more sense and less tinfoil has everything to do with the fact that because Trump got elected, 100%, this is Trump that caused this. Now, whether it's people, that were very aggressive on rate cuts, no longer not caring, or because they knew Trump was going to play the tariff game again. And tariffs add to inflation, and inflation lessens the likelihood of rate cuts. That's the most explainable answer without you wearing tinfoil, and it makes a lot of sense. The uncertainty due to the tariffs are what is causing this divergence in the 2 camps of voters. Now, I haven't read any of the news today, but let's take a guess that I'm sure something in here is mentioning that. I'm not even listening to what he's saying. But immediately after that, we got this news of Fed slowing the pace of the balance sheet runoff. And people are like, I don't understand what's bullish today. All of my stuff says bearish. And I'm like, I remember my first year of trading too. I really do. These like blow up prop firm artists out there doing this garbage. I'm going to tell you something. Do not ever, 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 ever bet against the Fed. This is my 2010 advice, my 2012 advice, my 2013 advice, where people were like, we're still in a recession, we're not coming out, but everyone's like, yeah, but quantitative easing. Yeah, but QE1 is over and QE2 is over and QE3 is going to end at some point. You're like, don't fight against the Fed. Quantitative easing that was initiated after the last recession was enough to rally the market for 12 years. Literally, do not ever, ever, ever fight the Fed. Don't even hint at fighting the Fed. Balance sheet runoff pace slowing is as close to QE as we're going to get, but it's a smidge away from QT. It's still QT, but it's slower QT. So the hint that the Fed is not aggressively, that the balance sheet is not aggressively running off as much as it was is hinting at possible, even though it's really not, nothing's going to change. I promise you nothing's going to change, but Wall Street algos don't care that's going straight up. But you know what? We were structured bullish from the start of the day. DD band doesn't lie. DD ratio don't lie. Hello, what's up, Johnny? What's up, Bad? 2 times 25 cuts in 2025 with possible 2 more in 2026. That's it. So is it a buy now? No. Class, when it curves like this, it's a gamma squeeze. This is shorts covering. It's not necessarily longs buying. This is going through the roof, which is great. Now, I didn't long this, of course, although I was thinking about it. I was getting a haircut. But boy, oh boy. Do I love being right. I'm always right about this stuff, I feel like. Matter of fact, when I closed off the stream today, I think we were somewhere up in here. But yeah, like leading up into Fed, I was getting a haircut all through here. Looks like we broke, Fed came up, we broke MHP, and that was a long. And I just tuned into the stream, so sucks to be me because I kind of missed out on some decent, lovely long setups. But boy, oh boy, this is great. Triple B told us not a big impact. Everything we teach was on fire today. How much did I make today? Almost $10,000 though. It was kind of nice. Literally almost $10,000. This is what I made today. I'll add that up. I don't know how much this was. It looks, now I'm not some math expert. Okay, maybe I am, but like it looks like it's about 10,000. I'm not gonna do the math and be a little lazy here, but don't fight the bull market. When we tell you how to find the bull market, don't fight it. 9,000 something. 8.8K? Hell yeah. So pivots will work perfectly now? Hold on. Before we get too antsy in our pantsy here, it's so great to see that on Thursday, Wednesday we saw a peak. So this ratio, this bull bear bias indicator, has everything to do with the structure of the options that the futures are tracking. And so when this number is greater than half, you start to see that bullish momentum start to pick up, at least short squeeze momentum. Two things on that. Number one, Wednesday we got a peak. Thursday we got a second peak. All the greater bear market was bear, 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 and Thursday was a hint of bull. Wednesday was a hint of bull. Thursday was a hint of bull. Friday was full on bull. Monday, Tuesday, and Wednesday full on bull, with the exception of Tuesday. Tuesday the numbers went bearish one more time for a slight amount of time. But monthly maps was bullish. So we've had one of the three indicators were bullish the whole walk up. Remember, DD ratio was bullish. DD ratio was bullish. It was bearish here, but monthly maps was bullish, and now DD was bullish. As long as you have one of our greater market indicators bullish, it will be bullish more often than not. Number one, no bear market, no short market. I told you I'd be the first person back into the bull party, and I have been. This has been great. Number two, commitment of traders. Like I said, there are people out there who teach, who should be forcibly placed with tape over their mouths so that they never speak about the stock market ever again, because the understanding is very simple. Liquid markets do not crash. They never do, they never have, they never will, and I'll show you 1,000 data points about this. We have been in a liquid COT for the last 4 weeks. As the data has been coming out, the market is liquid even into this crash. It's very possible that this news, a balance sheet runoff, is the start of a bull-up market. Now, we don't know how much the tariffs are going to affect things, but at minimum, I've shifted my outlook to possibly seeing a full retracement or at least V-shaped move even before there's more downside, even if there is. But I'm not sure anymore that there will be downside. We've had liquidity, whereas the bear side is covering, the bull side is selling. This is liquid into the selling. There certainly will be a wave up before any wave down, if not a wave up before another wave up. We'll see how this plays out. Dealers are having to go more short because there is more longing than selling. You can see the difference in the two slopes. The green is like this, and the blue is like that. There were more people covering shorts than there are selling longs. There are more not bulls than there are not bears than there are not bulls. And therefore, the discrepancy in this slope being greater than this slope means that that red line is going to go more negative to account for the additional shorting they have to do against the additional covering on the bear side. So when you see the market distributed like this, it's extremely liquid, and liquid markets don't crash. So everything is looking beautiful for recovery. As a matter of fact, the first thing I did before I got on the stream was to wire more money into my personal futures account. So we're getting ready to go. I'm not certain that this will be it, but that is likely it. Now, let me tell you something interesting. Slowing the pace of balance sheet runoff is Fed code speak for QT is not becoming more aggressive. This, if anybody is talking about this right now, this is the same as it was in December. There's pretty much no change. Let's read. I'll show you what news is good and what news is bad. So this is going to be perceived as very not bearish, which is why it's not bulls long in the market, it's shorts covering. And how do you know it's shorts covering? People betting against the Fed are covering because the market is curving this way and accelerating as it moves, pressing asymptotically upward against a straight line. When you curve this way, it is shorts covering on what we call not bad news. There's good news and there's bad news, but there's also not good news and not bad news. Fed in April slowing the pace of balance sheet runoff is not good news. It's just not bad news. So the bears are likely they're betting on bad news, are likely gonna step aside. Easy to see that. Yo, was in a sell, phone died, your chance went up by bot, now it's retracing, backstory of your life. What's the link? Seriously, just fed up? Wait, what link? What link you looking for? Okay. Few other things. Nothing. Wait, this is all analyzing this. Fake bull day. Yeah, it's probably a fake bull day today. But we have all bull setup though. 2 of the 3 are bullish, right? These are all about the projection. Uncertainty around economic outlook has increased. I said that this morning because of the tariffs. They don't know, so the uncertainty has increased, whatever. Fed to slow balance sheet runoff starting April 1st. This is the bull market, 1305. Okay? Literally here. Boy, when that dip came out, that news came out, we just rallied off of that. There is no if, and, or but. That is extremely bear squeezy news. 50 basis cut, 25. 52. So you see how they come up with that conclusion, 50 in 2025, 50 in 2026. How they actually do that is what I showed you. What they're looking at is the fattest part of this bell curve and where it's moving to. So currently we are here, and you round up to the nearest line. In 2025, we'll be here, and each one of these is 25. So that's the 50, and then 1, 2, that's another 50. And you and everyone else can say, aha, In 2026 or 2027, we might raise a quarter of a point or lower a quarter of a point. And if you average that out, there's probably no change. And again, if you average this out, there's probably no change. But a split camp is not good because there's polarity. It can go one way or the other. And it's not really that aggressive for 275 to 375, whatever. 1 point is not going to make a real difference in the market. But in such a bullish environment with great economic data, the market's looking for any reason it can to figure out some reason to sell or buy. So any slight news, this is slight, this is not a big deal. 2 rate cuts of 25 basis point will have literally zero effect on your life. Do I recommend trading overnight session? No. Yeah, it's not bad. I don't not recommend it. Personally, if you can trade the day session, it's a little bit easier and more manageable. Right? You have more data. But if you can only do the night session, we have nighttime pivots to help you out, seeing where that gamma exposure is in these overnight sessions. We have a dynamic hedge pressure model that's really great. A real-time open interest model. The first of its kind in Wall Street. Now, you guys know what I'm doing here. We are plotting for red lines. Y'all know the drill. There's one right there. Let's check NASDAQ. But yeah, dude. There are some idiots that stream. I can't even imagine why you, with your money at risk, would be comfortable ever watching prop firm superstars or people that just say the strangest, weirdest things. You know, options are very advanced mathematical entities. The average Joe really can't easily digest the math of what goes into options, but so many people, I find, try to. And a lot of people that to you may not sound dumb, but to me, the educated ear, it sounds absolutely absent of any understanding of the math that goes on under the hood. And I constantly remind myself why I don't watch many other streamers. It's incredible how dumb a lot of people really are to this stuff. Rule number 1, I learned early on in my career. Do not, if not, ever not, ever, never fight the Fed on Wall Street. I don't care what you think is going to happen. Never. The Fed says anything that hints at QE. The market will reverse on a dime and go. Literally. There's no QE that's happening. The Fed's not really going to do anything, but the hint was there. You guys got it? Now feel free to smash the like button really quick. Like a small little afternoon stream here instead of our YouTube that our Zoom call that we normally do. I'm telling you. And mostly for you guys. Logic is important. As a trader, you're going to have to figure this stuff out on your own. Let's see what old pal's talking about. Fed policymakers see 1.7% GDP growth in year-over-year in 2025 versus 2.1 in December. You see longer-term run growth at 1.8 versus 1.8 in December, so no change there. But GDP growth, again, GDP growth is a rate. A rate is slope. So GDP is going up, right? Let's just draw let me show you what GDP growth actually means. So if I'm going in a straight line and GDP is going up, just raw GDP. GDP goes up when population goes up and total number of jobs go up, yes. So GDP growth is this slope right here, okay? If GDP growth is slowing, then what happens is this straight green line starts to level out a little bit less. Angle number 2 is less than angle number 1. So slowing growth means plateauing. It doesn't mean down. It means it's still going up, but less up. means it's expected to do this. Now, what would be causing slower GDP growth? What do you guys think? I'm going to ask you guys a question. What would be causing slower GDP growth? Does SPY monthly maps show this move? No, monthly maps were not structured in SPY to show any kind of move today. The DD ratio picked it up, though. It's a quicker acting thing. Jobs, yeah, jobs be part of it. Tariffs, daddy, tariffs pretty much. The cost of things going up 10 or 20% is going to affect commerce in general. People are going to slow down. Businesses are going to slow down. I mean, used to that nice lubricated funnel of you outsourcing all your work and blah, 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 at cheap and having all this extra profit, investing in your company, building more product, growing off of that profit margin. If your margins get cut, whether you take the hit or you pass the cost onto the consumer and they take the hit, and all of a sudden your sales go down because they go to a competitor and buy because they're not passing the price on. Either way, tariffs make everyone's margins go down. Margins affect the rate of expansion. Less money in your pocket, less you can reinvest in your business to grow or become more efficient. So GDP is directly going to be affected by the companies taking a huge hit on their margins. You know, companies can't grow as fast. They can't hire as fast. As many jobs, people are going to be on slower rolling. You might have some jobs getting cut as relationships are forged elsewhere with the new logistical, chains people got to form. So the idea that the GDP growth is expected to not boom and speed up is understandable with tariffs, being the way that they are. And that's pretty much the reason. So the monthly maps, as you see that bull side bottom slipping up like this, was showing significant longer term bear structure. Shorter term bear structure, but monthly maps showed bull structure from here starting next week. Whatever we get on this move this way, there is bull support somewhere in here. So I don't know. The monthly maps didn't forecast today's move up because you couldn't forecast balance sheet runoff slowing down, blah, 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 or whatever. The news that let people continue to go. But the market did break gamma squeeze positive, right? The positive side, we call it bullish gamma hedging, but long gamma hedging is the correct way to phrase that. Whenever you have gamma hedging at any point of price where the longs outpace the shorts, we call it bullish gamma or bullish gamma hedging. It just means that everybody that's longing on increasing their order flow to balance a hedge due to options hedging, delta hedging. Gamma is the rate of change of delta. Gamma is the second derivative of the change in price of the option over the change in price of the stock when you fix time and other variables in the Black-Scholes equation. So price of the option, a price of the underlying, del price, and a fixed time and other variables. We'll put X is equal to delta. Del delta over del price at a fixed time to expiration equals gamma. Holding all other Greeks in constant, other things constant. And a PDE you must hold you must hold all your variables constant and vary one to the next. That's equal to gamma. Gamma is the first derivative of delta, which is the first derivative of change in price of the option, how it rates towards the change in price of the underlying. More delta hedging, more order flow. Gamma is the acceleration of order flow, being it's the second derivative. So the highest gamma peaks at the money at an option. When you balance all gamma at all options, you get monthly hedge pressure with just dealer options. Dealer options are going to be delta hedging all the time. Therefore, gamma exposure at the dealer maximum is considered the ideal spot for gamma squeezes. As you see, we curved away from monthly hedge pressure as is expected because that is a gamma squeeze. Now let's find a place to long from today. Nice little dippy dip here. Let's see if we can get something fun to trade off of. Nothing in SPY. Does QQQ have a liquidity pocket or something I can play on? Ooh, it does. Okay, let's grab, which accounts can I trade in? Maybe this one. Let's watch what Q does. We beat this red line and kept going. 720. Let's watch it. What does balance sheet runoff mean? Okay, so QE, when the Fed injects money into the system, the Fed prints dollar bills, right? They print dollars. It says Federal Reserve note. The Fed will print money, and how money gets injected into the system is they buy U.S. government debt. So the government will issue treasury notes to the Fed. Say that you buy a 30-year treasury note, I'm just saying, and it expires, well, let's say a 5-year. A 5-year treasury note, and they're going to buy all kinds of treasury notes, right? In 5 years, you get a fixed yield return at the maturity date of that. So when you're continuing to buy government debt, you're printing money to buy it. The Fed isn't just giving you money they're creating money to buy U.S. debt. That's how money enters the treasury and becomes circulatable. So once the Fed prints the money, buys the treasury notes from the treasury has the money, they give it to us. How awesome is that? It circulates. Now the question everybody has on their mind right now is, should we long at the bear zone top? Is that the right account? Yeah, let's do that one. Why the hell not? Just one contract. Bear zone, bull zone tap. We're going to go for a 20-point liquidity pocket. I might take another red candle off of this, but here to here would be nice. Nice little retrace move on this. Take a little bit of heat on this one. I'm okay with it. I'm up almost 10,000 for the day. We're okay. I love to take liquidity pockets, and I like to long them. So I'm a little early on this, though. I feel like an idiot jumping in right here. This is kind of the bad spot to get in on. Dummy Matt here. There's still, it's 720. I guess for scale, drawing this to scale was not the best thing because I'm like, I forgot how far we've moved today. Anywho's. That was the worst place to get in on. Let me close that out. I know that's lucky money, but let me get in at exactly the right spot. Roughly close to 720 is where that liquidity pocket is. So let me wait for that. 720 to 800 is LP. Say that was across my accounts. That was like $700 more though. Well, let's not take the risk in the middle of the LP like a numbskull. Let's get the good one. So guys, almost up like 9-something 10K today. So balance sheet runoff is basically this. In quantitative easing, the Fed is going to print more money and buy more stuff. A balance sheet is a balance sheet. It's, you know, money in, money out, what you hold, assets, liabilities, all that stuff. You guys know what a balance sheet is, right? So a Fed has a balance sheet as well. They're a bank. Any company has a bank. They're a private company. So balance sheet runoff means say you bought a 5-year treasury note and time goes by and you buy more and then time goes by and you buy more and buy more. Well, your balance sheet is accumulating assets. Balance sheet runoff just basically means the assets are maturing and they're not buying as much as they're maturing. So more of them are maturing or expiring than they're buying new ones. Does that make sense, you guys? Hopefully that makes sense. So essentially, the Fed is not like, essentially when you think of like the balance sheet running off, the Fed is like electing to not reinvest, right, some of their capital into, or like some of the principal that they've earned into new securities when the old ones mature. So when a treasury note matures, you get a yield. And typically that yield, they can buy more stuff with it. So balance sheet runoff means the amount of things on their balance sheet is getting less and less and less and less. Y'all understand that? If they're buying more, it gets like more and more and more and more. Trust me, Manessa, being a mathematician doesn't pay the bills. Be glad that you're not a mathematician. It gives you a lovely life if you love academia and love studying. Or in my case, you build a trading platform. It's fun to build something that people use. That makes me happy to know that I built something that people use. That makes me very happy, actually. Like if I built a pair of scissors that everyone liked to use, I don't care if it made money. The fact that I built something that people like makes me happy. Yeah, mathematician's not really the most, you know, best paying job. Just let me do the math for you guys and be happy that you have a cushier job. For sure. Okay. So mine is giving some information. The Fed becomes a buyer of notes and bonds and therefore suppresses interest rates, which is stimulatory. The stuff they buy gets added to their balance sheet. Runoff is letting things expire without buying more. You explained it much better than I did, which is anti-stimulatory. So if they're slowing the runoff, they're keeping more on their books, which is a roundabout way of simulating. Roundabout is the keynote here. Multiple-minded nailed it. So roundabout. It's not necessarily QE, but it's not worsening QT. So as multiple-minded is saying, it's not good news, it's just not bad news. Roundabout way of simulating. So when the Fed is buying more stuff, they're stimulating. When they're not buying more stuff and letting things just kind of mature and expire without replacing, it's destimulating. But if the rate at which the things are running off is lessening, imagine you are like, you have 10 and you lose 2 every year. In 5 years, you're at 0. But if you have 10 and you lose 2 every year, but buy 1 every year, you're still running off at a net of -1 per year. So you're kind of not stimulating, but you're destimulating less. That's how that explanation works. The only QD we need is Matt. Why? Because of the new haircut. I love my new haircut. All right. Let's hit that liquidity pocket, though. Let's get that new picture here. Lovely day today. Let's get 10K on the boards here. I'm going to go for getting... I want to be one of Tradeify's top 10 live account... or first 10 live accounts they've given out. They've given out to some of the people, but in their defense, in my defense, they started trading Tradeify way before I did. So I'm new to the whole prop firm game. I haven't been doing this that long. I'm the real account guy. So now let's see if I can go get funded with these prop firms myself. So that's my day today. Decent across the board, not too bad. And I traded most of this before Fed, so let's go on with iDocs. You bought my chairs yet? We have an awesome new pool. Like our house that we got. It's incredible. Let me show you views of my house. Let me show you guys what my new house looks like. Or kind of what my new house looks like without doxing myself. Let's see. I think I have... Hold up. We got this like dope house, yard, everything, like basically a big upgrade. Hold up. Let's see what's going on. Let's go to my Instagram here. Let me show you guys some cool stuff from what I've been dealing with this year. Oh, that's our New Year's party. Party. Dancing. Tie. No. Where's the house? I know I have them in here somewhere. This is what my life is like outside of that's a cute, look how cute I am. Look at that. Outside of living. It's me and the iDoc. I swear I have more as a Super Bowl. I thought I had something in here. Oh, I need to go back to 2024. That's why. Okay, let me scroll through this very quick. Nice dancing video. Thank you. So right now, as multiple minded said, multiple minded is 100% correct. The Fed balance sheet runoff slowing down was extremely bullish. Not extremely bullish news, but Wall Street will perceive anything that just even smells like QT easing up as very bullish. So interesting thing about this, when I went to the Aspire event, combined in this photo and this photo, this next one, is roughly like 15 million followers on social media. These are like all these big social media powerhouse peeps that we met. They're all huge. Let me see. Hold up. That was fun. Let's go back to where I got the house. Let me go forward. I have a fun life. I know. I get to swim with otters for my birthday. What is this? Oh. We do a lot of partying. But also, we're very serious mathematicians in this world. Where's the damn house pictures? I know they're here somewhere. Fire breathing. Yeah. Oh, the new house. Okay. Let's see if I can find. Oh, wait. I thought I had them somewhere. I guess I don't. What the heck? Well, anyways, I was gonna show you guys what it. I thought I posted it somewhere. Anyways, I guess I didn't. But we have like a huge, giant, amazing pool, like waterfalls, huge lake in front of it, overlooks a lake. I mean, it's beautiful. For being in the city, it's amazing. Need a little hint of autism to be a quant to make it past all these interviews. To be for mathematician, yeah, it's mathematician. Especially the neat thing about being an engineer, though, which is a special form of mathematician, it's so much easier to get a job as an engineer if you're not that smart. If you're just cool and they like you, and you like the same football team, the school they went to, you usually get hired. Engineering is a good old boys sort of career. When I interviewed for my first engineering job, I interviewed with a guy that sold me his one of his workbooks and went to my same school. When I walked in, he was like, "Hey, what's up, Matt?" I was like, "Hey, what's up?" And we talked about our professors and stuff. I knew I had the job. I didn't have to think about it. I didn't have to be smart. I didn't have to be good. I didn't even have to have a degree probably at that point. But lucky of engineering, you just have to be cool, and that's how you get a job. You know people. How do you write a trend in a trailing drawdown in Apex PA account? You don't. The thing is that you need to take your trades in 10-point increments on the S&P and 40-point increments in NASDAQ. Get your 10 points, get out of the way. Get your 40 points, get out of the way. And also your stop needs to be that as well. So for 1-to-1 trades, it's 10 and 40 ES and NASDAQ, okay? If you can get 1.5 or 2-to-1 trades, you're gonna have 80 and 20 with 10 or 40 stop, that's good. But the market will move equivalent to the strike distance between options, which is 1 point on each SPY and QQQ, which is roughly 40 points, 10 points and 40 points respectively. Wonderful couple. Well, thank you. She's very pretty. Oh, thanks, Vanessa. Yeah. I don't know what she's doing with a troll like me, but hey. I'll take it. Till she wises up and realizes she can do better. She'll be fine. I have to learn how to dance tango. That is on our docket of things to do, the dance tango. I wish I would have held this long better, but I needed to hit the liquidity pocket to be very confident in that. Siddhartha, hopefully that helps your understanding. Nice party. Just a sprinkle of SPF. Well, it's decidedly too much of the tism. Yeah. Trust me, I'm extremely nerdy enough that I talk very fast, especially in interviews. That people sort of just like gloss over and they're like, hey, he sounds like he knows what he's talking about. All right. I've only had a couple interviews. Actually, my one interview when I worked at Dow. So I was a reaction engineer at Dow Chemical. I used to run their acrylic acid monomer reactor units. And we used to make the precursor to diaper absorbent for Huggies. Believe it or not, is that guy? The diaper guy? Hey, ladies, what's up? What do you do? Make diaper absorbent. How you doing? No Zoom call today. No, Fed day. We'll do Zoom call tomorrow and Friday. When I ran that reactor unit, when I went to the job interview, it was crazy because I walked in. And by the way, the market is definitely decidedly long and short squeezing from 480 plus on QQQ, which is roughly equal to 119,700 on NASDAQ futures. This is a very bullish run on the news. Again, I was reading a lot of people on social media who are very clueless as to why the market's moving. And I'll tell you, I've been trading since 2010. It was so obvious what has made this market move. I'm up $10,000 today. People were like, structure's bearish, put the call flow ratio. I heard somebody say put the call flow ratio, like that actually dictates the direction of the market. These are things that not make the market move. What makes the market move today is this one tiny little piece of information that you can see right here that made the market extremely short squeezy. This is an experienced trader that's been trading at least a decade or more will tell you. You know, all your prop firm warriors out there and prop firm educators don't understand they started trading in COVID. These people don't know what's going on here. This right here is remnants of me trading since 2010. Any whiff or smell or scent of quantitative easing or lessening of tightening is extremely short squeezy on the market. It's not necessarily bullish. This isn't bullish information. It's just not bearish information. Balance sheet runoff slowing down is a very short squeezy thing. And how do you know something's a short squeeze? We always teach you guys in the classes. The market will curve in the direction in which it moves. So if it's a longs are buying on an event, it'll look like this. If shorts are covering in an event, it'll look like this. So let me ask you pop quiz, all you logic folks, or maybe non-mathematicians out there. Logically, why would the market curve differently on a news event where people are longing on some reason versus covering shorts? Why does short covering look like this and new longs look like that? Can you put in future bets for a certain time? Like what? Why would it curve a little different? Shorts require double volume, not to cover, but to flip the position the other way. Close enough. To flip the other way, but forced buying. Delta, gamma squeezing. Forced buying is the answer to the question. Forced. This is optional. People jump in and long, and then the news gets less cool and they stop longing. This is somebody covering a short, which forces someone else to cover, which forces 2 people to cover, and 4 people to cover, and 8 people to cover, and 16 people to cover, which creates that curvature that accelerates at the end of the move versus accelerating at the start of the move. The shape of it will tell you exactly the mechanism of moving. So why are we squeezing shorts on a neutral Fed decision where nothing changed in the dot plot? Nothing has changed in the dot plot. And nothing changed in interest rates. Literally nothing changed with the Fed. Even their long-term plan hasn't changed. The market is squeezing on non-bear news. The bears are getting out of the way, so something must not be bearish anymore, and this is a hint of a not bear news. It's not bullish, as Multiple Minded said. Runoff is letting things expire without buying more, not reinvesting that principal gained, right? You're gaining like a yield, for instance. You're not reinvesting that into new securities. That's balance sheet runoff, and they're slowing the runoff, which means by definition, they're keeping more on their books per month than they did last month. Even though there's less stuff on the books, the rate at which it's deteriorating is lessening and lessening and lessening, which could hint at buying something. So the way to think about it is you have 20 of something and every year you lose 2. 20, 18, 16. At 10 years, you'll be at 0. But if you 20 and every time you lose 2, you buy 1, it's like, okay, you're buying something, but then it's 18, 19, 17, 18, 16, 17. So you're buying something and you're stepping down slower. Stepping down slower can usually hint at buying something. If they're buying something, the folks on Wall Street that are shorting the market have learned over the last 8,000 years to never short against the Fed, ever. They get out of the way very quick, which led to a short squeeze today. Very explainable by someone with experience in trading that's been here for more than 5 years. That is getting ready to buy up something? Possibly, but I'm going to tell you, if I know my Fed, they're going to be very hands-off. I don't know, multiple minded, what do you think about this? He said with the short squeeze, 1 grabbing 2, 2 grabbing 4, etc. What do you guys think? The Fed is likely to start buying something and head in easing, or just slowing things down? I don't think they're going into easing, but what do you guys think? What does that mean for risky assets like crypto? Crypto really has no reason to move on its own. Crypto is just a tether. No. Don't. It's going to do it. Oh no, my monitor's going to shut off. Okay. My monitor cleaning cycle care panel decided to come on and tell me it's going to shut off. So if everything shuts off, guys, I'll have to say goodbye to the stream. My monitor, it has a window right here. It usually doesn't do that. Weird. And it won't let me cancel it either. These OLED monitors are... Quantum dot OLEDs are show. I hate them so much. I love them and I hate them. They're the best monitors you can buy. They enter a cleaning cycle every so often. So what do you think? QE was anomaly that they will hold back until absolutely necessary. I 100% agree. So it doesn't necessarily mean we're going to go into any sort of easing, but with tightening slowing, it doesn't matter. Wall Street, any good news is going to freak out a bunch of shorts, and any not bad news is also going to freak out some shorts, and that's what we're seeing. You should change it by Samsung. The OLED sucks. The only Retina is great. Yeah. I hope it doesn't shut down while I'm in a trade, though. I did want to get the LP trade. But there are some goofballs out there. They're sitting there with their thumbs up their asses like, I don't understand why things are going up. My indicator said it's going down. My cumulative delta says it's going down. To put the call... Oh, there it goes. Okay. So how it's going to work is I can now actually... Oh, that's so funny. Okay, so my monitor is now officially turned off. Officially, my monitor is off in front of my face. It's a black screen right here, but you guys can still see it. And you can also still see my mouse. So what's neat is I'm looking on another screen with my encoder, and I can actually still work on this monitor that's actually turned off. Nice. So as long as we're there, we're good. As long as they're good, my friends. Okay. Let's see what QQQ looks like. But look. Wall Street is not gonna listen to anyone's structure when news comes out like that. We're not entering any sort of quantitative easing whatsoever. The FOMC would rather die a miserable death as a company than to go into QE at this point if someone forced them to. I think Jay Powell would resist with a fight any pressuring from any politician to go into QE. That's how much they don't want to do it. Go spend $1,000 of that, 10K on a new monitor. Bro, it's a new monitor. That's the problem. The newest monitors are awesome, but then they suck. Quantum Dot OLED, you go to Best Buy and they're like, check out the Quantum Dot. Look at how bright the reds are. And you're like, oh yeah, this is really bright. I like it. But then you go home and every 14 hours, it has to shut off and run a cleaning cycle. What? It's like monitors going through a car wash right now. I don't get it. This monitor was $1,200 on its own. Thing's terrible. It's QD OLED, so quantum dot in general. It's not the WOLEDs, it's the quantum dot ones. So Victor says they run a cleaning cycle when you turn them off. You don't need to turn them off in other times. So no, this brand that I bought, the MSI version, it doesn't give me an option to turn it off. I can't turn it off. Every 14 hours, it cycles. Now, it runs the timer to cycle in the middle of the night. If I put my computer on sleep, then it does. Did I have it on for 14 hours? I usually never turn my computer or my monitors off. The monitor's on New Zealand time. That's hilarious. All right, so let's see what we have over here. Can I long QQQ at hedge pressure? Oh, 8 minutes left in the market. I don't think I can do anything here. So I'll send you guys pictures from the pool, though. We'll hang out till a little bit till after market closes. I'm curious what futures does after options roll. So options will expire 15 minutes after market closes. So we'll stay till 4:15 and see what happens. Watch MOC come down to hedge pressure and support. I think so. Just checked your uptime, 13 days. No way. Yellow line, take profit. Probably. Yeah. What are you guys shorting? You shorting this? I'm excited to be like 10 grand richer, though. It's kind of nice. Pretty decent day. I've been wrecking this Tradeify. It's been insane. I've been having a good time with it. I can't wait to be one of their funded traders. That'll be awesome. Okay, guys, don't forget we have 30% discount on Take Profits, 30% discount on Tradeify. We get all the best. We're gonna do giveaways next week. We're gonna give away we're giving away a prop account every single day. Sometimes 2 a day now. The bigger we get, we can do maybe 3 a day. Hopefully my goal is to do 3 a day, if not more. Brett has allowed me to give away straight to funded Tradeify accounts. So come every morning in the stream, we're giving away straight to funded accounts. This is many, many, many hundreds of dollars of value. Be nice. Victor with the free pro. Very nice. So we'll do this starting tomorrow. Everybody come tomorrow. Any chance a DD on Info Platform will roll tonight? I don't think so. Not with a move like this. Oh, I'm sorry. I misunderstood you. Tomorrow night. Tomorrow should be roll. Unless the contract, when the contract naturally expires on the last day of, or naturally stops trading on the last day of trading, then the platform will automatically roll into the next available contract. When's the next payout? Monday. Monday. Friday to Monday is the payout window. What's the move tonight? I think on a short squeeze and a close like this, the market's going to digest a move like this tonight. And we're going to see how European markets respond to something like this, and Asian markets. It's really hard to guess. In general, the monthly maps still show bullish liquidation over the next 2 or 3 days as calls are rolling off at this level, right? We're going to kind of enter into another liquidity pocket, which is okay. The market's likely to chop through here, but it is non-volatile with VIX looking pretty favorable for continual bull move up. If a short squeeze usually is the starting mechanism of a reversal, it's good to see us moving through one right now. But again, I'm not totally convinced that we're entering a bull market just yet. And the whole of things, because not all 3 of the greater market signals are bullish, but you can see that we have really strong bear territory that lasts all the way through May. Being below this gray line means bearish. But inside of here, there's a pocket of strong bullishness, like a wave through April. So April is March is like a transitional month, and April could start a bull wave. So the structure is there that after March expiration, we could V up and reverse. Okay, so give me a second, you guys. All right, y'all. Oh, my monitor's back on. Give me a second. Lovely. MOC imbalances are negative? Yeah. All right. Now you feel clean now, monitor? Do you feel clean? That's all we care about. How clean does the monitor feel? All right, let me get my desktop back on here. Well, let's not. That's the wrong display. Now, monitor's gone forever. All right, let's just talk. I tell you, this MSI brand has no option to turn this crap off. Ugh. Where's iDoc? Oh, she's coming home. I'm gonna ask her if she want to have a pool day. I'll send you guys pictures from the pool. Our pool is amazing. Yeah, so we got a new house in December. New everything. She's getting a new car. New house, new dog, new life. Everything's great. Life is so great for us. We're having a good time with life. Okay, so we're gonna wait. Welcome, you love it. Miles, what's up? Come over to Paper from Paper's Mastermind and sign up for the lifetime membership today. Miles, oh, amazing, brother. You're gonna love it. So Monday we start the boot camp. By far, I hope you love it, man. Okay. Decent day today. Like I said, I ran up close to like 10,000-ish, 9,500, 10,000. I didn't add it up, somewhere in there. But this Tradeify, I'm trying to, my first goal is 100,000. Clearly, I need 80,000 payouts to get pushed to live. That's the next goal. When is March expiration? Is the 3rd Friday of the month, which is in 2 days. That monitor fucking my shiz up, yup. What a great day today, though. My Tradeify total for the day, I don't think it's added all the trades in together, but I'm running close to 76, 77% win rate. A third of the way to my 100K target. And you guys are going to love bull markets with Rocket Scooter. By far, the bull market is the best market to trade. Our stuff is so on point in the bull market. Bear markets are very irrational and volatile. Once you go to volatility, pivots are sharp. Hedge pressure pivots are sharp. Liquidity pockets 90%. You know, these things are awesome to watch. Let's see MOC imbalance on what? On which ticker? I don't know them off the top of my head, but you can usually get them in Thinkorswim. For SPY, for QQQ, for Apple. What do you want? I make these 5 to 10K days look way too easy. Don't fight the bull market. That's rule number 1 here. Feels so good to have a haircut, man. I just need to redo my Botox on my forehead. You can see my forehead wrinkles with this brand new camera. And we are closed. You missed all the fun, Stu. You had 2 points to go to. No excuse. Took you all day, but you finished a Thinkorswim alert system that uses a British AI voice to tell you when MHP, hedge pressure, bull zone, and bear zone are triggered. Oh, that's amazing. I'd like to write an auto trading bot somehow so that I long every single time at bull zone bottom and bear zone top under the right conditions. And just let that be my retirement. Time to go count the money. Yeah, what's up, cheater? I'm just watching into close. Yeah, my monitor, the encoder, monitor decided to shut off randomly, which is weird because normally it does it overnight, but you're stuck in a 10-point mentality and you're getting wrecked. Yep, this is what happens in the bear market. But you might get lucky because VIX was in contango. We rolled over below the contango midpoint, so we're good to be a kind of a clearer, easier, non-volatile possible month, so it could be good. You buy that subscription? I couldn't make an auto trading bot for you guys. I would get in so much trouble. I feel like somebody would be knocking on my door. I know when I signed my exchange agreements with the CME group, they particularly were like, are you using this for auto trading? No, I'm not. Are you sure? Yeah, I'm not. Are you making sure that any piece of this data requires you to move your mouse and click a button to long or short something? Yes. And there's no macros or automation. I'm like, yes. Like, I feel like with that many questions they're asking, they don't want you to automate it. For whatever reason, they don't want you to. So some of the exchanges are really brutal about using their data for automated trading. It's very weird. You have to go, I don't know what the special consideration to get to be able to do so, but a lot of these exchanges don't like that kind of stuff. But man, it would be so cool to make an auto trading bot for myself, though. You guys can make whatever you want. I can hint pretty heavily that go rip the data from the browser and build your own local macro and auto trading bot on your own. I can't stop you. Nice. Why the British voice? I feel like British voice would make trading so much more peaceful. The issue is we need Matt to allow you to get it via API. Right. We'd have to sign contracts with people that we export the data to and whatever. The best thing you can do, since we can't, like, we could create an API as well, but then we'd have to create it. We would need to recoup our investment by some means to make an API by selling it or whatever. Like, we can build one, but like, what would the purpose be other than the few enthusiasts? So I'm telling you, rip the data from your browser. Just yank it. Grab it from the browser. It's cached. Load up your favorite tickers. Write a macro that loads up your 4 or 5 favorite tickers. The data loads in cache and is grabbed from the cache. And then you don't need an API. Do I need a NinjaTrader for an add-on? What add-on? So I'm giving you guys a hint. You guys can write your own automated stuff pretty simply. But you can't, if you rip our data and distribute it to other people, though, I'll shut you down. But runs off and starts writing code. Yeah, you can take the information you get and write your own local macros and stuff. We can't stop you. We could push to the algo community and then pay for whatever good API data. Yeah, that's a good idea, Gabriel. We could. The problem is that I come into some legal gray area with providing information that can be perceived as selling a data feed for automated trading, and my exchange agreements would fizzle up into dust that are very clear about, are you sure you're not automating anything? Like when they ask you more than once, you know they're serious about it. So if I tried to argue, well, maybe there's a gray area. I mean, you didn't explicitly say this. They'll probably just say, fuck you. Fuck you, goodbye, and cut the cord. So I'd have to go through some hoops to be able to create something like that. It'd be pretty nice if I could for myself. I can do it for myself, for sure. How far easy or hard is it to pick up Rocket Scooter day trading ideas? Or Rocket Scooter trading? Easy, Osman. It's probably the easiest entry into trading that you will, trading education that you will have. It's designed to start from scratch, and it's all logic-based and conceptual. Like stuff is very much like explained in a way that's easy to understand. The techniques are like basic algebra. It's not even heavy on the math. It's pretty nice. And the theory we have is we predict volume and build risk management around it. If I try to create an algo on Quant Connect, I have never used Quant Connect before. But Osman, you'll pick it up immediately. The practices are behavioral, so it's like a lot of the training has to do with how big you bet and why you should bet big or why you should bet small, things like that. A lot of trading education spends a lot of time with charts and all this complexities there, and it doesn't really help traders get good at trading. Our boot camp starts on Monday. You got to come. $20 boot camp. $1 a day for 20 days. Here's the link, guys. Let me post it for you. Good day today. I'm excited. I made some money. We're pretty good. We're pretty good on this. We're rocking it. Use Alpaca if you want to look at algo trading. What are they? What kind of products do they have? Broker API, trading API. Interesting. Looks like they have like a APIs in a box. What's up, Shannon? How's your day, man? Your day was good. My day was good, but your day was good, but mine was better. Hey, man, all relative. Glad you guys had a good day. Wish you had started your trading path learning what we teach at Rocket Scooter. Now you have to shake off bad habits. Hope that helps the newbies. Patty says the same thing. You guys are really nice. Trading is all about betting correctly, betting the right size when you need to, accounting for volatility. These are things that we train you on, and you know, this is very exciting. It's good to see, guys, that we're rolling into monthly expiration below triple B. This is time. This is time to be happy that a reversal could be around the corner. Doesn't mean I'm, you know, being stupid against the bear market and saying, well, we're going to reverse tomorrow. But the evidence is there that the market is trying to reverse. We can all see it. So we take it one day at a time. I'm not going to find any bull market. I'm going to keep my ears open to catalysts, Trump tweets, things like that. Probably better off than you guys, more experienced traders, since you will have less bad habits to unlearn, Osman. Yeah. We have about 10,000 people that have bought the platform. So it's a huge community of people. Lots of people taking the boot camp. They love it. What props does the Rocket Scooter work with? So Rocket Scooter is an informational platform. It can connect to a real brokerage account, but it doesn't connect to these fake prop account things. You still have to trade in your prop account. We're the first people in Wall Street to create a real-time open interest model for retail traders, as well as creating gamma exposure models of market makers only in retail trading as well. People have tried to make models of options related stuff, and it's elementary compared to what we've made. How are today's trades going? I made about 10,000. Give or take. It's pretty good today. I tweeted it. I'm on a path to try to make 100K with Tradeify payouts. Simple as that. Yesterday was roughly like a 10K day. It's pretty good. Aaron, 1165, mostly evals, PNL, and Discord. Oh yeah, dude, you were crushing it this morning, man. That number was like 8,000 this morning when you mentioned it. You've been working all day. There you go. Made like $4,000 more. I remember when you said that this morning. Got to go work off the other half of the rent out back in the AM. All right, Chris, see you later, bud. Jane, you win. Connect the broker to the Rocket Scooter to be able to use the tools. You don't for all of them. If you want some of the futures data tools, you need a futures broker to get your futures data. And it's really easy to set up. You would essentially get like AMP or somebody and sign up for an account there, and then you just buy your data from them, put a couple $100 in the account, and then it connects to Rocket Scooter. So that's how you get futures data into the platform. We don't sell you futures data. It's cheaper if you do it that way. That's why we do it that way. If you don't connect futures data, you will be missing the DD bands that are automated, and you'll be missing the DD band break alerts. That's it. If you don't have futures data collected, you can still get your DD bands from the table and just draw them manually. You have a full-time job working from home, so trying to squeeze in some day trading as well as trade a few hours a day. Yeah, this is like, so part of our thing, Osman, is about waiting for a trade to set up and then taking like wait and trade. So we're not like in my active trade time is like 15 minutes or less. I'm in a trade and out of a trade super quick. I wait all day. You can set alarms, hit the level. I'm in and out pretty quick. It's usually how it is. Wish you were here for the run up. I was getting a haircut. Trying to get like all, you know, snazzy looking. I feel nice. I got my little fade going on here. I feel when I get a good haircut, I always feel better. Where's the doc? We're gonna go to the pool today. I'll send you guys some pictures. Go to our Discord, everybody. Yeah, you like that? Trust me when I say part of what trading is bad, trading education is bad. It teaches people to always be looking for trades. Like, am I missing this move? Am I missing that move? You're always focusing. We divide the market into like distinct points of entry, and then I can just set alarms, and then when we get to those levels, I'm in and I'm out. And I don't really spend a lot of time trading. People will tell you here, I sit out most, and more than 95% of my time is spent sitting out and planning. What makes me enter a trade? So what we actually can find is high volume pivots using a lot of techniques, margining techniques, options techniques. We can actually predict volume at certain levels. And so when price hits a certain level, I long or short just at that spot. And based on the confluence I have, I can dictate which way I want to trade, long or short, and then how big I want to trade. On our platform, we have something called liquidity maps. Liquidity maps are mapping out that flow based on gamma and delta hedging. Is there something in Rocket Scooter to educate you on how you use it? Go to our boot camp. That whole thing is training you. Start on Monday. We start all over on Monday. Do I ever use bots, or have I made trading bots before? I have made trading bots before a long time ago when I was still fooling around with technical analysis. I was making, I had some really cool things I was trying, but it all failed because it's TA. TA doesn't really do anything. But I was failing at making the trading bots work really well. But I was making some bots in NinjaTrader to try to make something out of it. Hold on 1 second. What's that certificate on the wall behind me? That is a genuine 100% certificate for me being a proud owner of a Seiko watch. I'm trying to say Michael Scott. No, that's my degree over here. Or Michael Scott had on the office had his watch certificate framed behind him. So, funny story about my degree. So, you know, I was a poor kid in college. I worked 3 jobs to pay my way through school. I worked for research for the head of the department. I taught classes at University of Houston, and I was I worked at Domino's Pizza. I had all 3 of those things. I was broke as a kid. And so when I graduated, everyone that graduates gets like fancy, you know, frames for their diploma or whatever. We didn't even have money for that. So I went to Walmart and I bought myself a random picture frame, just a regular picture frame to put my diploma in. And I never went and bought the gigantic, you know, everybody has like cool frames for a diploma. And I never went and got one because I wanted to remember where I came from. I know it sounds a little corny, but I never wanted to just be like, I've made it in life. Check out how cool my diploma is. I'm like, I made this myself. I took my Domino's pizza money and bought like a $12 frame from Walmart. And that was my, my diploma has remained in that frame for 20 years. I graduated 20 years ago. Holy shit. Time flies. Am I from Houston? I am from Houston. All right. Last question. I got to go. IDOC's messaging me. Yeah, so that is smoking. That's my, so I have a degree in chemical engineering. I was 3rd in my class and I graduated cum laude with honors. And I was on the dean's list and all that stuff. Wait, you're from Houston, Vanessa? No way. Which part of town? Without doxing yourself. Or tell me in Discord. I love meeting Houstonians, man. There's a lot of us that hang out. So, you know, we'll all go out and drink some beers and talk trading all the time. I can introduce you to the crew if you ever come out. And they'll hang out in the stream too. Hey, what's up, Hades? Good to see you, man. Yeah, we're like in the Memorial area kind of right now. Trust me, there's like 20, 30 Houstonians that chill in the stream. You woke up late, LOL. Hit me up near Miami. I should be going to Ultra, so I'll hit you up when I'm in Miami. You on the northeast side of town? Oh, cool. Yeah, we had a mini meetup like a couple months ago. Whole bunch of us got together. All right, I'm out. All right, I'll answer the rest of your questions tomorrow. I gotta go. We outie. Time to go enjoy my day. Pool day today. Love making a little bit of money in the TradeFi accounts. Killer.